I appreciate everyone who could attend, and we're going to take some time this morning and go over HAFA, what that program really is. So we're going to get started on this and go over it. If you have any questions, email them in, and Liz can, or write them in there, and Liz can give them to me, and we'll try to answer them as we go along. So HAFA, what is it, and does it really help? If you look on the next slide, what HAFA breaks out to, and of course the government's really great about putting acronyms on everything they do, but HAFA is the Home Affordable Foreclosure Alternatives, also known as the Exit Gracefully program. And basically what it boils down to is the mortgage payment is unaffordable and you're interested in transitioning to more affordable housing. You may be eligible for a short sale or deed in lieu of foreclosure through HAFA. The benefit of HAFA short sale is that you no longer are responsible for the difference between what you owe on the mortgage and the amount your home sells for. Also receive a $3,000 in relocation assistance upon successfully closing the short sale or deed in lieu of foreclosure. And if you, let me kind of expand this just a little bit. While HAFA provides these benefits, we're going to go through other screens here. They'll show you how you have to go about it. The one thing that it doesn't do is it doesn't eliminate the credit reporting that'll be going on as a result of the short sale or deed in lieu of foreclosure. The short sale and deed in lieu of foreclosure is really where the credit impact is going to be. It's not necessarily that there was any leftover amount owed. It's usually always based on the fact that a short sale took place or that there was some sort of foreclosure that took place. So if we go to the next page or next screen, eligibility. And the eligibility is pretty simple. You may be eligible to apply if you meet the following. You have to have lived in the home or have lived there the last 12 months, documented financial hardship, haven't purchased a new home within the last 12 months, the first mortgage is less than $729,750. This right here is the key piece. Obtained your mortgage on or before January 1st of 2009. And then the last part I'll kind of go over. You must not have been convicted within the last 10 years of felony, larceny, theft, forgery, money laundering, all of those types of things. What they're looking for here is that they don't want to have anybody who they're doing this program with who's been known to have mortgage or real estate fraud, money laundering, tax evasion. I mean, they have to have, they can't have anything in their criminal record because a criminal record will be, criminal background check will be done. And if they have anything that falls within these categories, they'll automatically be disqualified. The next page, this is probably the eligibility for criteria is guidance only, so be sure. We're going to talk about the mortgage servicer on the next page. This is probably, in my opinion, one of the most, if not the most critical parts of this program. HAFA is available for mortgages that are owned or guaranteed by Fannie Mae and Freddie Mac or are serviced by over 100 HAMP, that's Home Affordable Modification Program participating servicers. Now, we're going to, what falls under the Home Affordable Modification Program, or how would you say that, HAMPA? Yeah. Is the unemployment program, the principal reduction alternative, and the home affordable foreclosure program, alternative program. There is a link. Where is that link? It's further down here. But there's a link that you'll have to cut and paste that you can go to that will show you all the servicing lenders. And if your client's mortgage is being serviced by one of these lenders, then they have to contact them to see which program they qualify under. What do they consider financial hardship? Well, Financial hardship would be really fairly simple. Two-income household, excuse me, two-income household, and becomes a one-income household because of layoffs, not because one of the partners has decided to stop working, but excuse me, that there's been a life-changing event, either disability, um, unemployment, things of that nature. Other parts of financial hardship would be a sudden death in the family of one of the primary providers to the household. Husband passes away, wife passes away, so you have a loss of income there. Major medical event, and that would be more classified as, say, a disease that has caused one of the income producers to have extended stays in the hospital, have to be off work for treatment. Maybe they had some sort of accident that doesn't allow them to work anymore, have become incapacitated due to some sort of accident. Those are all financial hardships. Divorce is not a financial hardship. Buying more than you can afford is not a financial hardship. There has to be a life-changing event to some level, and that's considered a financial hardship. Okay, so if we go to the next next screen, what I did here is I went through the question and answers to see if what you had to do to determine if you even had any, if you could even be eligible. So so if we'll start with the first question, what it says is your home your primary residence? And so the answer I put in there was yes, and you can see I have it in red. The next question was, is the amount you owe on your first mortgage equal to or less than $729,750? And the answer I put there was yes. The next question is, are you having trouble paying your mortgage? And then it gives you an example. You've had a significant increase in your mortgage payment, or a reduction in your income since you got your loan, or suffered a hardship that has increased your expenses like medical bills, which we just went over. And so I answered that one yes. And then it'll ask about your current mortgage on or before January 1st. I answered that one yes. And then here's one that is very critical. Is your payment on your first mortgage, including your principal, interest, taxes, insurance, and homeowners association dues, if they apply, more than 31% of your gross monthly income? And then they have a way there for a person to calculate that on that link. If that link doesn't work, there's a website address I'm giving you that you can go to and work on that link. So I answered that one. We pull up the answer, yes. Then it also will ask you, are you the owner of a 1 to 4 family unit home? And the answer to that was yes. Do you have a loan owned or guaranteed by Fannie Mae or Freddie Mac? And I answered that one yes, and I'll give you the links on how someone can check on that. Are you current on your mortgage payments? Current means you haven't been more than 30 days late on your mortgage payment in the last 12 months. And I answered that one no. Are you struggling to make your monthly mortgage payments because you have a second lien? And I answered that one yes. And then this one, the next question, I didn't really understand the relevance of this. I had to research this because you can see South Carolina falls in this list. But what I've come to determine is that these states also have foreclosure prevention programs. If you recall, the other night on the news, they had Debbie Kidd from Family Services that was talking about a program that the state of South Carolina has that allows that they have $350 million in that could possibly assist South Carolina homeowners that have had dramatic income drops to help make their mortgage payments, bring them current and get them back on track. So, so I answered this one yes, because I am a resident of South Carolina. And so the next step, this is pretty interesting. It gave me the answer to what I'm to what I'm eligible for. So if we'll pull that up, it says, yes, you may be eligible for the following programs: the Home Affordable Modification Program, and this is where HAFA falls under, is the Home Affordable Modification Program. And then the next one is Second Lien Program. You carry a second mortgage and your first mortgage is eligible for or have already received a Home Affordable Modification Program, excuse me, then this is a possible alternative as well. Then you have a hardest hit fund. You know, this is one that as it says, varies by state to state, but this is where there's been a significant change, not only in the household, but also in an area. For example, take Detroit or areas of Michigan when auto workers were being laid off, not by the hundreds, but by the thousands, and plants were being closed down. I think GM wound up laying off 75,000 employees or something like that. And so you have a whole area that all of a sudden becomes extremely depressed. This would be the fund that they would fall under. Is there a question there? No, that's all. They'll take all the income that comes into the house. It doesn't make any difference who's on the mortgage or not. And then the next one is Home Affordable Foreclosure Alternatives. That's HAFA, and this is this program is designed to help a person, as they call, exit gracefully out of their house through either a short sale or deed in lieu of foreclosure, and receive some financial consideration to help them relocate. Liz wanted to know if someone would be eligible for all of them, and my research tells me no, that you might be eligible for a combination of them. For example, maybe the hardest hit fund and the Home Affordable Modification Program, or you may qualify for Home Affordable Modification and possibly HAFA later, or the first one and the second one. The first one and the second one, to me, are the ones that would go hand in hand pretty consistently, because of a lot of homes have first and second liens on them, and the second lien issue around the country is almost as bad as the first lien issue as far as delinquencies. No, the $3,000 is just to help the person who's having to sell their home through short sale to just relocate and be able to have money for deposits and all that kind of thing. And we have a question. Well, there's a long answer and a short answer. A short term, no. Long term, yes. The question is, if a borrower that qualifies for HAFA, would they be able to qualify to purchase another home? And the short answer to that question is no. The longer answer is, over a period of time, somewhere between a 2 to 7 year window, depending on exactly what was going on at the moment when they had this short sale or foreclosure take place, would determine on when they could purchase a home. For example, if they were current on the home when it went into short sale and used the Home Affordable Foreclosure Alternative, and I use that as an example because what I've kind of derived from all my research is you do not necessarily have to be late to qualify for HAFA. You just have to be able to document you're having a hard time making the payments, and that the only way out of it is to get out of the house, and the house is underwater, and so on and so forth. But what loan criteria requires is that if you did a short sale on your home and you were current on your mortgage at the time the short sale took place, your eligibility to purchase a new home, depending on how much down you're going to put, is anywhere from as short as 24 months to as long as 60 months. And that's all dictated by the down payment and the status of your mortgage at the time that it went into short sale or foreclosure, and what your credit scores are, and how well you've handled your credit since then, and how well you were handling your credit prior to. So you got to have all of those uh, situations in place to even be considered within 24 months, and you would also have to have a minimum of 20% down. The last thing, we're going to go to the next page and go further into this. This is it would be very I'm sorry, let's go to the next page. During that eligibility question process, these were the two programs that I didn't qualify for. I didn't qualify for the home affordable refinance and the emergency home loan program. On the next page, you'll see that Liz is there, the link of mortgage servicers participating in HAFA. If you cut and paste that link and the first link there, this will give you a list of all the lenders, not lenders, but mortgage servicers who service mortgages that participate in this program. So the first obstacle is you have to determine whether or not the servicing lender for your seller actually has one of these servicing lenders. And then the second part is it has to be a Fannie Mae or Freddie Mac loan. So how do you determine that? If you see the link there, it says fanniemae.com/loan lookup. The person can actually go in there and determine whether or not their loan is a Fannie Mae loan. And on the next screen, yeah, all of these are going to be sent out to everybody, so you don't have to be feverishly writing down all these links. You'll get a copy of all of this. The next one is to determine if it's a Freddie Mac loan would be Freddie Mac/my mortgage. They can also call if they can't determine it on the websites. One of the things that is strongly advised, and I would certainly endorse this idea, is these sellers who are going to have to go through any one of these programs really should work with a HUD certified counselor, and I'll tell you why. You can, for all of you who have worked short sales, you call a lender every day, every day, every day, every day, every day. And if you're not doing that on a regular basis, the short sale is not going to go anywhere. I mean, if you just leave it up to the lender to get back with you and all of that, each and every one of you have stories, I'm sure, of how many calls had to be made and how difficult it was and all of that. But if you have a seller who wants to use HAFA or any other program, it is best that they work with a HUD-approved counselor. And the HUD-approved counselors that I know of here in the greater Charleston area are with Family Services through their credit rebuilding program, where consumer credit counseling, debt management, and all of that is. And they have some of the best HUD-approved counselors I've ever met. They work really hard. I know this firsthand. A good friend of mine experienced unemployment last year. And while they've been able to keep their house current, they felt like they were getting to a point where they were starting to run out of money and what was the next step. So they called their lender and basically were told, you should just pack up a truck and move out right now because we're just going to go after you. And so I gave them the name of someone to go see. And not only did they help them with their mortgage servicer to get more cooperative, but now they have the building blocks in place if they need to go into the home affordable refinance program or anything of that nature. So for them, they weren't interested in selling their house. They're not interested in relocating. They're not interested in doing anything. What they're interested in doing is keeping their home and getting through this period. And they got a long way with using a HUD-approved counselor as opposed to not using one. So I would encourage you to look over this information. You can see where it gives you a link or a number to call to see who a counselor is. Did I put a link in here for one? No, I did not. But I can tell you through Family Services, and they're located in North Charleston, they do have HUD approved counselors that can certainly help your sellers out with this. Well, you have a question? Well, the question is, how does a real estate agent get involved in a HAFA situation? Does the agent, what does it say, have to get the listing? Um, that's a very good question. First of all, if you have a homeowner who wants to participate in HAFA or feels like they might be eligible for HAFA, or you think they're eligible for HAFA, I would certainly do the listing right away. That way you have the process of having the house on the market in place. The second thing I would do, and there's nothing wrong with this, is I would get them in touch with a HUD counselor and actually go to the meeting with them. This way, the HUD counselor knows that you've started the process of trying to sell their home. You've done a market analysis, so you know about what the house should be worth based on what you have it listed for. I would strongly suggest that you list the house at a realistic price, regardless of how much the seller disagrees with you. And then the last thing I would do is while you're with the HUD counselor and the family, just make sure that you keep your seller on track to do the things that they need to do. It's going to take a lot of work on the seller's part to participate in HAFA, but what will happen is, and as every one of you who have worked on short sales knows, eventually the lender has to see the contract, has to approve the purchase, has to approve to take whatever hit they're going to take. So it's good that you're walking along this process with your seller. There's really not anything necessarily that you'll do other than list the house and try to sell it. But it is important for you to know what you need to do to be of assistance to your sellers. So we should take listings that are underwater. Well, the question is, should you take listings that are underwater? I think that that's a very difficult question to answer. I'm not a real estate professional, so as you know, viewing it from an agent's point of view, I don't know if you would see that as something that's a waste of time or whatever. But Mama Liz says yes, so that really answers that question right there. The question is, will VA fall under any of these programs? And that answer is no. They have their own program, just like FHA has their own program. Okay, so there is a checklist before your seller goes to meet with a HUD counselor. Information about the first mortgage, such as a mortgage statement, is definitely necessary. Do you have to have a Fannie Mae or Freddie Mac loan to use the HUD counselor? No, the question is, do you have to have a Fannie Mae or Freddie Mac loan to use a HUD counselor? And the answer to that is no. If you have a mortgage situation, whether you have a Fannie Mae loan, Freddie Mac loan, USDA, FHA, or VA, you can use a HUD counselor to help you with that process. That part doesn't matter. Now, each one of these programs have different requirements. FHA, for example, does have a process where, and this is where the HUD homes come from, that at one point in time, once the house reaches a certain number of days delinquent, they take it back from the lender and they try to work directly with the borrower on some sort of modification program and to get the borrower back on track. The HUD homes that you see that are for sale are typically homes that were abandoned. The people just gave up, wouldn't participate with the things that HUD wanted to do, or just felt like there was no hope, and so they just allowed the house to go into foreclosure. VA, I don't know exactly what most of the foreclosures that occur through VA are, but what I have seen in the past is um, relocation by a person in the military is not considered a financial hardship. But a lot of houses I see get delinquent during that time frame. Um, the other thing that I've seen is significant change in the house as far as someone has become disabled, death, things of that nature. So, um, but VA also has a process to work with the veteran, and VA is very liberal about how they handle these things. And it really requires the veteran, though, to be proactive and work with them. But if they're working with a HUD counselor, this will assist that process. And as far as USDA is concerned, they have their own internal processes as well to help borrowers who are delinquent. But again, getting with the HUD counselor, and HUD counselors, approved HUD counselors like through Family Services, are not going to charge these people thousands of dollars to do this. I think the fee is something like $100, and it's very nominal. I may be wrong about what the exact fee is, but it is very nominal, and they will work with the borrower throughout this process. To go further into the checklist of when, to start this process, what they need to take to the counselor is second mortgage information or home equity mortgage, account balances and monthly payments due on all the credit cards, student loans and car loans, recent income tax return. And although they say one, I would highly recommend that you take 2 years tax returns in there, because sometimes you cannot tell the whole story as to the uh, event that took place. So for example, uh, a household where a husband and wife are both employed, husband was hurt on the job in 2007, has basically just been on workers' comp since then. Workers' comp is just a percentage of what they're going to make. He's going to be considered permanently disabled. And that happened in 2007. Well, if you provide your 2010 tax return, that doesn't show the real picture. So I would go back to when the event occurred and go forward from there. I think we have a question here. The question is, are there any programs that will help lot owners and investors? No. What I would recommend for someone who owns a lot that's underwater is obviously you get the listing and then go with them to the bank to see how the bank would be willing to discount or work the short sale to get rid of the lot. And investors aren't covered by any of these programs, and that has always been the case since they were started by the Obama administration. And that's the same for FHA, VA, and USDA. If that house turns into an investment property, it's really just pay up or get rid of it. The question from Boyd is, what is the relationship between the internet leads that Residential Mortgage of South Carolina is providing and the HAFA program? Well, there's probably no direct link, but this is what I think would happen. Those leads are coming in basically from people who are looking at short sale and foreclosure, pre-foreclosures. So this may give you an opportunity to contact the seller, see what their situation is. Um, Maybe their listing agent hasn't told them about any of these programs, and so you can now become a source of information. If the listing has actually gone into been taken off the market, this may give you an opportunity to get it back on the market, get the person involved in HAFA, and work on the exit gracefully while you're putting a new buyer in the home. But again, I would caution you to remember that how long it takes you to work a short sale, this is also going to be the same time frame. This is not going to happen overnight. But yeah, and Liz would like you to remind you that these pre-foreclosure leads that you're getting may not be properties that are actually listed at this point. So I think there's going to be a lot of listing opportunities that will allow you to be a source of information for the sellers to either to get involved in the HAFA program and allow you to walk through that process with them. Because the thing that I would want to stress to each and every one of you is that if these sellers are people who are conscientious and responsible about their everyday finances to begin with, at some point in time they're going to become a buyer again. And if you've done your part to assist them and walk them through this process and be a source of information and devote your time and energy, and then not lose contact with them afterwards, you probably stand a pretty good chance of selling them their next home. And Liz also wants me to remind you that the buyer leads that you're being given out are people who are interested in foreclosures. So you have an opportunity of possibly getting both sides of the sale, even though on the short sale side, I think historically the agent has probably discounted some on the commission. But 100% of zero is still zero. 10% of something is still 10%. So just that's my opinion. The rest of the information is pretty standard: gross monthly income. It'd also be helpful for the borrower to have a letter describing the circumstance that caused your income to be reduced or expenses to be increased. And again, you can go over these items here. This is the link for the website for the HAFA program, or Exit Gracefully. And if this particular link doesn't work, all you need to do is just cut and paste it and go to it that way. Okay, we got some more questions here.
What questions would you ask one of these short sale leads to determine if they are responsible and will work with you to actually sell the house? We have a list of questions.
Okay, could you repeat that?
What questions would you ask one of these short sale leads to determine if they are responsible and will work with you to actually sell the house?
Well, the question is, what questions would you ask these short sale leads to determine if they are responsible and will actually work with you to sell the house? I think the first question is when you initially contact them. If the sellers, I guess that's what we're talking about, the selling side, if the sellers appear to be standoffish or uncooperative, or hang up the phone on you, well, there's probably a pretty good possibility that all those other things don't exist. And Agent Own also has a list of questions that you can ask that Liz said that she would be willing to send to everybody. But the short answer to that question is, I think that if the seller will take the time to sit down with you, there is a number of questions that you can ask them that has to do with how they're doing with the rest of their finances, what event has taken place. If the whole purpose of selling the house is because all the houses in the neighborhood have dropped in value and I just don't see why I should stay here, then no, they're not going to qualify for any of the government programs.
And Tracy actually needs to read her emails. Tracy says, we cannot talk to the owner that's listed. Everybody knows that. We can get in a lot of trouble. Plus, I'm sure Agent Owner is going to take 35% right off the referral fee when short sales a lot of trouble. And I plainly said in the email, there's no referral fees.
Well, let me let you answer all that.
Okay, Tracy. Tracy Hatchell said that Agent On was going to charge 35% referral fee. And if y'all read your email that I sent out to everybody, it plainly stated in there that there are no referral fees on these leads from Residential Mortgage. And hopefully everybody knows you check a lead to see if it's listed before you contact the seller. Okay?
She has two more questions.
She just said check the MLS. And she just was asking, she said, okay, Stan wants to know if the leads come through Residential Mortgage, can we require those buyers use Residential Mortgage?
If the leads come through Residential Mortgage, can we require the buyer? Yes. Actually, you can, because we've purchased the leads, and since we've purchased them, we are free to do with them as we see fit. And when we contact the customer, if we were contacting the customer directly ourselves, we would not say, well, give XYZ Mortgage a call. I'm sure they can help you. We would be generating the leads to help Residential Mortgage build its base of business. And because we are affiliated, the best way to make this work is to have the agent and Residential Mortgage working together to help these buyers. It gives you the link. It doesn't tell you who the people are, but the question is, does this site give you where the listing of the HUD certified counselors? And what it does do is it gives you the link or phone number to call to find out who they are in your area. Rodney Hurd asked, so HAFA is for people who have conventional mortgages. Fannie Mae, Freddie Mac, FHA, and VA have their own programs. And the answer to that is yes, that's exactly correct. If it's a lead from us, the answer is yes. The question was just to make sure if the lead, I'm sorry, I can't see that. Let me have you read it. The question is, are they required to work with Residential Mortgage on these leads? The answer is yes. We're providing the leads to you, not the other way around. The next question is, who can agent-owned agents call at Residential Mortgage for questions about these various government programs? I would say right now, if you're talking about the HAFA or any of these other programs, it'd be best to call me. I'm probably the most up on it than any of the loan officers. And the reason why is we don't participate in any of these programs. So the loan officers aren't going to know all the ins and outs of it, because it's not something that we would even be doing, that we would even be participating in. So if you have questions, give me a call. My number is 843-709-3600. I think there was another question on there earlier from Stan. Okay. All right, so here's the link for the website, and if we go to the next page, I put this information in because I think it's equally critical. Scams, and I will tell you that anytime you hear someone say that they can fix a credit or keep you from losing your home or can get your mortgage current for you, that's all a scam. Whether you think so or not, they're all scams. If anybody has to pay, money up front, hundreds or thousands of dollars up front, all they're doing is being taken advantage of. And real quickly, I'll give you an example. We had a house that we foreclosed on in Elgin. The customer actually never made a payment. When the customer closed on the loan in June of 2010, he got in the mail about a month later a letter from one of these companies telling him that they could modify his mortgage and lower his payment to 1%. Now, there was a specific problem in there that we tried to explain to him that he never got his arms around. The mortgage had to have been originated prior to January 1st, 2009. And his was originated in June of 2010. The end result, this customer never made a payment. We foreclosed on it, and he moved out, and we resold the house. That is the hard facts of these things that people get in the mail. And he paid this company $2,500 and never got anything out of it and lost his home. So there you go. So the tips to avoid scams, beware of anyone who asks for you to pay a fee in exchange for counseling service to modify a delinquent loan. Scam artists often target homeowners who are struggling to meet their mortgage commitments or are anxious to sell their home. So again, as a professional real estate agent, you have the opportunity to protect these sellers from these types of scams. I think we have another question there.
Please clarify residential mortgages role in short sale leads. Is it to do purchase loan if the buyer is found, or are you going to participate somehow in HAFA?
Okay, let's go back here a little bit. The leads that Residential Mortgage of South Carolina is providing to agent-owned agents is real simple. These are people who have gone on the internet who are interested in purchasing a home that may be in a short sale or pre-foreclosure situation. We are not participating in HAFA. We have never participated in any of these modification programs because we do not service the loan. We close the loan and fund the loan in our own name. We package the loan. We insure the loan, we do all of those things, but eventually we sell the loan in the secondary market. That doesn't make us a broker, that just makes us a lender who does not typically service our loans. Now we do have some loans that we are servicing, but there are extenuating circumstances around those loans. The leads that we are providing is not to get Residential Mortgage and you involved in HAFA. This is just one more alternative that could possibly be available to you as an agent when you're talking to a seller who has a home that they're upside down in and might be anxious and trying to sell. We're just trying to bring in potential leads that not only can provide business for you, but can provide business for Residential Mortgage of South Carolina. And since we are not licensed real estate agents in the state of South Carolina, in order to make this program, the LEAD program, work effectively, we need to participate with agent-owned agents. It's that simple. There's nothing more to it. So, don't sign up, again, when you're talking to, these potential sellers, warn them not to sign over the deed to the property to any organization or individual unless you are working directly with your mortgage company to forgive the debt. So, again, you need to have their servicing lender endorse anything that's going on in that matter. Never make a mortgage payment. And this one I cannot stress enough. Never make a mortgage payment to anyone other than your mortgage company. You would be amazed at how many people do this.
She wants to know about leads, buyers, or sellers of both.
Okay, in regards to the leads that Residential Mortgage of South Carolina is providing, the question is, are these leads for buyers, sellers, or both? And the answer is both. Okay, on the next page, these are, if you think your seller has been a victim of, or a buyer has been a victim of a scam, they can file a complaint. On the next page, there is also other links that they can go to see if they've, the Federal Trade Commission has a YouTube channel, so they can see that to see if they've fallen in any of those. U.S. Treasury Department have materials to help homeowners avoid these scams. Loan Modification Scam Prevention Network, and you can see all of the coalitions that put this together. And the Obama administration has also launched a coordinated effort with federal and state governments and the private sector to target mortgage loan modification fraud. And that's basically the whole presentation. That you will be getting a copy of all of this. And again, as I've said before, if not all of these links work, let me know, or you can go on to the main website, which is the makinghomeaffordable.gov. This is another thing I'd like to bring out. On any of these modification programs, if the website somebody is looking at doesn't say .gov, then they have caught up into some modification company. And yesterday and the day before, when I've been researching all of this, I can't tell you how many websites I wound up in before I realized it wasn't a government website, and I had to go back and get out of it. So the key element here is that it needs to be a .gov website. Any other? Oh, well, thank you. What was the question? Okay. Any further questions? Sorry we went over the half hour, but hopefully you'll find this information helpful and useful. And you know, like I said, if you have any questions whatsoever, my number is 843-709-3600. Thank you. Have a good day.